fintech. We even here in the audience, I know few companies which just were established in 2025. Do they have an advantage or not having this legacy and only building this company from scratch by using the modern systems, using the data?
I mean, it's all about data and to understand the data. And AI is nothing else just to understand data. So in the end, the bottom line is it's not super fancy. It's a lot. We have a lot of data, and every single day it's growing and growing and growing. And AI helps us to to understand these data, and which brings me basically back to my point. We have to understand this data because everything we do, every single decision we make is based on data. And if we don't have proper systems which helps us to analyze them and to understand them, we couldn't basically do what we do. And I think this is same for all the financial service companies, maybe a different angle because maybe a little bit more and less data, and maybe you need super sophisticated quantum AI, and sometimes maybe a little bit basic AI is enough. But bottom line, I think this is the thing which combines or brings all of us together.
Christian, your company is longer on the market. You have a little bit longer experience.
Well, as an expert, I'm a little bit longer in the market. The company is probably around the same age. And while generally, really, I agree with everything that you guys have said, I still like to bring up a few more critical comments that from our experience on implementing platforms with banks. Obviously, we talk about the right rating and the right scoring, and of course, everything you do at Quantum is perfect. Obviously, what you do with the low-code technology and helping banks becoming more efficient in modules, basically, is very much important. What you do at RBI is in the right direction, but there are still questions. Why do we still have only 40 or 60% adoption at this stage? And when I look at this, I see a couple of items that are partially in the execution and partially in the concept that cause these problems. So in the execution, very often, and this is something I'm very curious about you guys, when we implement with banks, we quickly realize that we become the most knowledgeable entity about the bank's data structure because the banks are operating very much in silos. And when you start implementing your low-code platform, you become the expert. And one department tells you to change a form and you say, you can't change that form because the other department relies on that data. So something is still missing in the bank to be really the data owner or really that knowledgeable place that you become a software provider. That's what we experience quite often.
I do agree. You're right. That's the main problem. Because usually banks, they are quite huge organization.
And siloed.
And silos.
And
each silo is thinking about their goals. And it's sometimes it's hard to connect them and to make a correct.
At the same time, I see on the rating, on the quantum part as well, yes, great, that's wonderful, and we try to be even more perfect. But then the risk is that we're all chasing the same clients, because those the algorithms will be similar, and we're missing the second category or maybe the third category of clients. And this is where, for me, specifically in the SME space, and I'm not talking about the smaller SME loans, I'm talking about the CapEx loans, the monitoring is much more important. No loan defaults before disbursement, yet we spend so much time analyzing the loans before disbursement and not necessarily monitoring and interfering. Because if you give an SME a 5-year loan, you can almost expect that there will be problems over the 5-year period.
Statistically, yes. Statistically, for sure
there will be problems. So you need to be present there as well to make sure that not just your Class A clients, but also your Class B and C clients are receiving financial services, because they might be valuable and they might even expect higher margins, or they might pay higher margins, and you can manage them by really monitoring. So all these things need to, this is where, again, technology hits common sense, and you still have to, banking is still a people business for me. I know we're always talking about reducing interference and reducing interaction, but still that coffee drinking SME entrepreneur that likes to feel comfortable, so then when he has a problem, he knows who to approach. I think that is still something that we can't underestimate. And if we get all this together, I think then we really have another quantum leap in the SME banking.
Yes, please, of course.
No, I was just going to say that I agree with the monitoring part, and a lot of the models that we use for origination can then be applied to understand when a company is going through struggles and what we call early default detection. So you 2-3 months ahead, you want to detect, or even more, you want to detect those companies that are likely to fall into arrears, right? Even before they hit a default. So when you do that, then your company needs to have a way of trying to avoid that from happening, right? So that could be a refinancing of the loan, that could be some explaining them what will happen if they go default. So anything that you can advisory, anything that you could do to avoid that from happening. So, and another thing that you said that is really interesting is that class A, B, and C, one of the things that we've seen are more and more institutions go into lifetime value models instead of default models, right? So you might expect an SME falling in arrears between the next 5 years, but depending on the rate, that could be profitable. That could be expectable and calculated within your operating cost. So if you change the perspective to a lifetime value, they might even default the third or fourth loan that you give them, but they've already brought in money for the company, so they are still worth it.
And they collaborate with you so that this default is being solved. I mean, this is the same thing where those defaulted loans are not your risk loans. Your risk are the ones that are performing and maybe not performing tomorrow anymore. The ones that are defaulted are your problem loans. But that's exactly that approach that is necessary really to make it better. Yeah.
Yeah.
And the lifetime value,
please.
that's the solution for the second part, but we have similar approach according to the early detection of some warnings. It was the early warning system I mentioned during the presentation. It's the same idea, to find a warning before something's happening, before the client will default. And that's the more important part, I think.
Just before I will give the floor to Kamil as an expert in the risk management and in data, you mentioned, we spoke before the conference about the issue in the banks of sharing data. You just mentioned also about it. Łukasz, could you just add something about it? Like
I think now banks, at least those with whom we are cooperating, they have really a lot of data. Not only internal. Of course, they have a lot of internal data, but they have also access to many external sources, and they are using these sources. Of course, there are some problems, some regulatory limits, because you cannot process data, which is where there was no agreement to proceed this data and stuff like this. But usually when you have a client, you can use very large amount of data even from external sources. And I think it can help, especially in a SME, for SME customers without credit history. Because you can use payments from another institutions, you can use the e-commerce behavior of that entity, and you can use this data to make another approach, another scoring approach, and to proceed in a different way with the client. So in my opinion, there is a lot of data. Quite often there are problems with the quality of the data, but you mentioned already, it's a common problem. It is and the quality is structure of the data or relations between the data. It's very important, even if you want to use the quantum. It was surprising for me also that we can use.
I think you won today with this quantum, really.
It's still a bit buzzword for me, because when I'm looking at quantum computers, I see this huge.
No, but they exist. They
exist.
They exist, of course.
So
I never seen, but I heard.
Yeah, but going to the beginning, the quality of the data, it's always the problem. In April, we launched, Polish Bank Association, they launched a database of real estate properties prices information.
Oh, cool.
And one of the problems there is the address data. Still,
Which is super easy.
I think so, but when I started my career 20 years ago as a programmer, it was a problem, how to identify the right place, the right properties. And it still is a problem, because we have lots of different types places when we can put an error, and it's still a problem, just to identify the right place, not to use the data.
Yes, understand. Christian, yes, please.
Just one of the things that we saw as well is the more interesting you make the platform, the more interesting you make that digital environment also for your team, the better the data quality is. If your team gets something out of the platform, some wisdom, some interaction, some some recommendations, then they also see faster the value of entering better data. If the data is, if the traditionally it was a workflow like a conveyor belt, where the faster I move it away from my desk, the better, yeah? That leads to really crappy data. If you make it such more interactive, then really you get a better data quality out of the system faster.
Yeah, so
Yes, please come.
maybe I just want to comment because I totally agree with you, but maybe it could be controversial for the data provider perspective because in my opinion, there is not art in use as much data as possible, but the art is to use it in a smart way. Yeah? Of course, we discuss and comment, let's say, the quality, efficiency of the process, but I think that is a very important factor, but also the crucial one is the time, because even if we talk about the QAB process of the assessment, the business entity, or even the monitoring, the early warning, still the time is the crucial of the factor because of fact that we need to have information as soon as possible. Yeah. So from our perspective, I think that it should be also highlighted. Yeah.
Very interesting comment. Thanks about it. And I will just share a story about the data. So I started my career in invoice factoring business, which I happily left after 15 years. Because after saying one word, 15 years, factoring is quite boring. But after this, at the beginning of my career, there was a project in Poland. Back then, I lived in Poland. Now I live in Berlin, where digitalization on finance doesn't exist at all. So there was a project to share data among the invoice factoring companies in the country. And the Association of the Polish Factoring Companies were involved in this project. It was a project. And this project finished 17 years later, just this year. And it shows...
Successfully, I hope. Successfully, I hope.
I don't know. I'm happy that I don't have to use this system anymore. So, but it shows that this legacy among banks and the cultural differences between banks and fintechs is still huge. And as you, Amadeus, work with banks and fintechs, I'm really happy to understand your perspective, because banks say that they are like to compete with fintechs on the SME lending market. They do it, but what is this gap still between fintechs and banks among this SME financing? If you can tell us from your perspective as you work with both. And of course, I'm super happy to know what Delina will tell us.
Yeah, let me come from two perspectives. So one, as an alternative lending provider, I don't see it really competitive, even though we do serve the same clients with money. But there are so many SMEs, and they do have different wishes how they want to get treated. So our customers is not second chance, it's not subprime, it's very good SMEs with valuable business, but they just don't have a good and close relationship to their banks. And they don't need it, and they don't want it. And that's exactly the clients we are facing. They are happy about a provider who is able to serve 500,000 or more in a couple of days. If they start then in an exchange with the bank, it takes weeks at least. So from that perspective, it is clearly competitive somehow, but the market is so huge. And what we do, so we originated now 5 billion in 6 years. It's for us a huge number, but for the banking sector,
of course it is a lot.
But in comparison to the banking sector, it's nearly nothing. From a software providing perspective, I mean, that's just super tough. So I had couple of talks already today. I think everybody who is selling software to banks knows what that means. Even though if they want, sometimes they just can't. And when we started to make a software business out of our platform, of course, we started like, hey, we have a huge platform, works perfectly, you can use it, improve your completely process. We completely killed it because we said, this is not going to work. We will just not be able to sell a platform to a bank because it's too big. So what we now do is we need to shape small solutions and face dedicated problems at the bank, really on a SaaS basis.
Like a small problem.
Exactly. To be honest, I think that more or less the only chance to get a foot into the door. And in Germany, we do see a lot of cooperations between fintechs and banks where they approach was like this, okay, now I will improve your entire process. And most of them are not successful in the end. And I think it's just of the complexity of the bank's infrastructure. And yeah.
Absolutely. I have to agree with it. When we talk about infrastructure, that's our biggest challenge. And I mentioned at the beginning that when we started our transformation journey, it was the first thing that we started to tackle. So yes, we are quite slow. And I think also that this is the opportunity that the fintechs and tech companies grabbed in the market in order to get the market quite fast. On the other hand, it is living proof, and I have my colleagues from Croatia here. Initially, when we started the implementation, it took us 1.5 years, right, to roll out in the first country, which was Croatia. Why? Because we had to deal with a lot of legacy, not only infrastructure, but also when it comes to the policies, as I mentioned at the beginning. We wanted to do a transformation because SME was untouched for many, many years. While everyone focused in retail, in PI segment, there's where the number of customers is, there was the biggest part of the profit is, nobody touched the SME segment, so it was about time. It took us 1.5 years to roll out the first project, the first country, and it was mostly a tech rollout. So we didn't focus too much, let's say, on how it would really integrate in the other countries, which took us a lot of efforts afterwards, going into exactly the idea of decoupling the components and trying to use standardization as a basis for our strategy. What does it mean? We build standard APIs, we standardize the data model so that in every next rollout it would be much easier. Mm-hmm. And can you assume what was the last rollout that we had just maybe a month ago in Kosovo, time-wise?
Half a year.
5 months.
Congratulations.
So it is a huge change. It is absolutely a huge change. And not only that, but we are talking about an end-to-end solution. So it's not only customer-facing, it's rather decision engine, automated signature, and also contract generation and disbursement. So it took a lot of time as preparatory, dealing with the foundation, but we managed to overcome it, and it's something that we are really proud.
Yeah. You said about this legacy of systems. Of course, we have to also remember that in case of Raiffeisen, but many banks in Europe, it's also the problem with this merger acquisition of banks, whereas like sometimes 20, 30 systems, you know, in one bank because of the merger acquisition and so on. And of course, the fintech starts from scratch. So they just like build everything from the beginning. So, you know, not only the systems, but also the data and everything, the quality of data, the systems are like very fresh. So it's mostly the only one. So of course it's easier. And I'm always curious for many years, like almost, exactly 20 years being on a financial market, about not only about the technology, but also about this cultural differences between banks and fintechs. And especially I see it when I moved from Poland to Berlin, where I live now, and this cultural, let's say, difference, not being too rough, between this mentality in banks, even among the IT people, even among the people who should push the digitalization in fintechs and in banks is huge. Why?
Well, I'm just smiling because that's absolutely true. It takes the humans to try to drive the digitization afterwards. And why I'm smiling is because, you know, traditional banks have been operating as such for many, many, many decades. The recent, maybe, mindset that we had in our sales force is like, now this digitization is going to take our job. How we deal with that? And yes, of course, we deal with that. We need to educate we need to educate the employees, we need to educate the team, and we need to try to make it integral part of the whole. So now, in our first country, we have done it. This digital sales, it's absolutely onboarded and implemented also in the incentive schema, so they know absolutely very well which customer fits where.
Yes.
And it takes time.
Perfect, perfect. Madhaus, one word, as you operate on the German market?
Yeah, I think there are a lot of topics into it. So I was with Deutsche Bank for 11 years because before I changed to the fintech market, and this was 2016, and this was really the beginning of digitalization, and it was super fancy. It was super easy to get meetings. It was like now the fintechs comes in and you have sneakers and no suit. This was fun and everything was new.
Yeah.
But I think still this was not, it was valuable somehow because it was a change, and I think it was the beginning of that a big thing is changing until today. And even though this has everything changed a little bit again, so all the banks, at least in Germany, realized, okay, sneakers are nice, but we really need solutions in the background which work. It was the beginning of this big change, and I think for the banks, like they understood, okay, there are new opportunities. After 1 2 years, they understood it's not all competitive. It's not a fintech against banks. It's a collaboration, so this was the kickstart for this whole change, I would say, which is good, and I think we'll still a few steps to go, but I would say definitely the right direction.
I would like to add an
Please, of course,
insight
Łukasz.
from a Polish market, yeah, because we were working with Polish banks for years, and you mentioned about the culture. Yeah, it's very important. But I was able to observe a change in culture in one of the biggest Polish banks, the biggest Polish bank, PKO BP. Years ago, when the president was Adam Marciniak, yeah, he was always saying, and not only saying but doing this, that he was saying that PKO BP is a fintech company with a banking license. Yeah, we know it all. And okay, he was saying this, but for me it was interesting to observe as a software provider from inside, in a way from inside, yeah, how the culture changed, how the processes change. You mentioned about the silos, yeah, they provided agile methodology, yeah, they started to connect people from IT, from different departments. So there was really a change in the behavior, in the culture. Of course, I still think it's not so strong like in a fintech, yeah, but I think banks are trying to do it.
Of course, they have no choice.
I think the agile methodology is one. The low code is something that really gets the buy-in from an IT department, because now you're not telling the IT department anymore that you're being replaced, but you basically get the platform that you can build yourself. And on the stuff on the front end, what we saw is really, you have to accept that it takes time. You have to basically handhold, communicate, and the whole soft skill implementation is probably as important, if not more, than the technology itself. Until they realize, as you said, the first round, that it gets easier, that there's more time to service the customer, that the data is already there. The loan application doesn't take 3 months anymore, but goes down in 2 weeks, and I can look at the next item. I think those are the soft components that have been neglected, and I'm happy to share my Deutsche Bank experience with you. I left in 2013.
Maybe some merger acquisition?
I left in 2013 when the
No,
boss
Lena.
said, hey, you only look at data, I can't use you anymore. So
one thing that I would like
One
to
word, please, because...
Yeah, so one word. I'm from Argentina, so different market, completely different, right? So Latin America. But in Latin America, to solve this problem, banks opted for just creating a separate entity. Completely different, right? Digital twin of their code, different entity, different people, different culture. Just went, okay, we can't solve this problem, just create one new.
Cool.
Right? So they try to serve the market with 2 different companies, completely inefficient. But we are in Latin America, so.
Let's talk about the future, first of all, because the whole design of this conference, which I really appreciate, is really cool. It's showing us the future of the cities, and congratulations, Olena, for this idea. So let's talk about the future. How do you envision the digital SME lending journey evolving in the next 5, 10 years? Christian, next 5 years. I hope that I will be here as a moderator in the next 5 and 10 years. I hope so. I'll be then 50. And yeah, what will happen? Where will it be?
I think it still be a gradual move towards better knowledge, better experience, better ability to handle the technology to, as I said before, low code, or even handle AI, so that each individual department can push the SME business forward in their direction. It's look, I'm long enough there that I saw the first appearance of a laptop or of a PC with Excel or PowerPoint. The first PowerPoints were horrible. Yeah. Now today it gets much better, and it gets there's a lot of education inside the banks. So technology itself is still just the enabler, and the stuff will come over time.
Okay, thank you very much. Łukasz, 5 years from now,
5 years
SME
from
lending.
Now, for sure there will be still adoption of AI, and that's for sure. Yeah, but I think that there's still a lot of things to do. For example, with the integration of data. I can imagine a process when a SME company just came to an office, let's say, give the ID, and all the data can be gathered from other databases, some internal, some external, maybe even tax data can be available. Yeah, and so I hope there will be no need to fill the 20 plus or 40 plus or even more fields in a form to get a loan. Yeah, it can be done much faster.
Yeah, we hope so. Yeah, the tax data will be for sure with us still, especially in Europe. Thomas, quantum, of course, is the future.
All of them using quantum.
All of them will be using quantum.
Yeah, so tax data will be there. So there are two things humans cannot escape in life: death and taxes.
There are countries where it's less restricted.
Okay, so in Europe at least. So I definitely feel that in 5 years, I hope, but I feel we will be in a seamless experience, right?
Yes.
Well, that's immediate or not, yet remains to be seen. But at least avoiding the burden of uploading this documentation, doing extensive QIB processes, because I believe those will be left out from the market. So what he was saying just yet, we need a system. We will have a system in which you are able to provide, let's say, your tax ID, and that's it. Even the owner's information. Sometimes it's really relevant.
Yep.
And that's it, right? So your company's information, your company tax ID, your owners, and that's it. Well, you might need to connect your bank account, even your personal ones. Open banking, you have 2-3 steps onboarding process. The same as you go from now when you are requesting a loan from Revolut, from N26, from Monzo, from any of the new banks, right? The same for SMEs. Of course, the decision might not be automatic, because there might be some things you need to check offline. That might be some public data sources are not available. I know some of the data providers are buying PDFs from the chambers of commerce.
Yeah.
So all of that is difficult to have it completely automated in 5 years. But I would definitely put my money on that the experience for the client is going to be seamless. On the back end, well, we'll still have... Yeah, but it will have a mask of automatic decisioning, and it will inform you of our decision in 24 hours. Just hang it.
True. Thank you very much. Camille?
Maybe from our perspective, what we even observe at the moment, I think that SME lending process will be a little bit, let's say, organized, similar to the retail process, because of the fact that very often the SME customers expect to act as a retail.
Because they're also consumers.
Because they pay attention to smart and easy process. The efficiency and the quality of the process should be very high, because the lenders want to, let's say, improve the acceptance, improve the, let's say, the risk. And I think also that what could be the differentiator in the next few years is the ESG factor, because of the fact that at the moment banks observe the situation that they have to, let's say, help their customers to bring the value, for example, in case of energy transition, in case of transformation to more, let's say, eco financing. So I think that could be also the changer for next years.
Thank you very much. Delina, from the perspective of the bank, but like focusing on SME lending.
From the perspective of the bank, and especially on the perspective of RBI and our strategy, for sure, in the 5 coming years, we see from the customer point of view, we see that we will leverage and deliver these seamless processes, especially when it comes to the fast track and unsecured. But we will be there for the customers when it comes to the more complex use cases and more secure deals, for example, because definitely we understand from their feedback that they need the human touch in this optimization of the processes. And what I would like to see, this is a wish, but I really hope that in the 5 years will be accomplished, is that we really leverage on the Gen AI. It's part of the strategy of Raiffeisen, encapsulated in all the areas. And I really hope that one of the use cases that we have today, like in Romania, for example, we have 5 financial statements, 5 types of financial statements. And we cannot simply read those data by OCR. This is a technology which we are really great of, but it's not enough.
Guys, I see some opportunity here.
Yeah, there are solutions. You can use the AI.
Let's keep this sales for the afternoon.
I really have hopes that Gen AI will support in this one to support the maintenance processes mostly and the back-end processes.
Yeah. Thank you very much for those few words. 5-10 years from now.
Keep it short and generic. So what we clearly do see right now is eroding margins within SME lending. We do see the B2B digitalization wave is coming. So we get clearly the feedback from the banks after years reprioritization of B2B to B2C.
Yes.
It's happening right now, and for sure in 5 years the processes will be, however, way more smooth and way more digitalized and automized for sure.
Yeah. Thank you very much. I hope we'll meet here in 5 or 10 years. And then I hope that the gap between fintechs and banks will be smaller. Probably we will face many mergers, acquisitions, and collaborations between. For sure, the usage of data will be huge, and finger crossed for your businesses. Thank you very much.
Thank you very much.